Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a special end-of-day report after the Federal Reserve raised rates by 75 basis points as expected, but increased the expectations for rates going forward. Let me talk about it, and we'll talk about some of the major price action versus some of the major currency pairs. The Federal Reserve raised rates by 75 basis points. That was as expected. However, what wasn't expected is that the Fed also increased the expectations for the end-of-year rate for 2022. They moved it up to 4.4%. It was just 3.4% in June. They also moved up the 2023 rate, end-of-year rate, to 4.6%. That was 3.8% in June. The 2024, they see the Fed funds target rate at 3.9%. So they see it coming down, but not until 2024. So there's a lot of time in between now and then for the rates to remain high. And what we saw in the market was that the dollar initially moved to the upside on the higher expectations for rates in the shorter term. Then we saw a rebound as the press conference got underway, and you know, you can't help it but Chair Powell, despite his willingness or his desire to stop inflation now, to fight it to the end, to be as hawkish as possible when he's presented with questions about the economy. It's hard for him to ignore the fact that things like housing market is slowing down. He's seeing some declines in commodity prices, including oil and some other commodities that have come down. Also, the expectations that there's going to be some demand destruction as well that should slow the inflation pace down. But having said that, unemployment still remains high, or unemployment still remains low. The number of open job positions are still well up there, indicating that perhaps the demand will remain. And so what the Fed has to do is just try to attack the demand side of the equation, which would allow for unemployment to actually move higher than lower. And the market sort of caught wind of that later in the day after his press conference, and started to reverse some of the declines in the dollar, the declines in the stock market. The stock market's ending the day with the Dow down over 500 points, and the other indices all trading down about 1.7% on the day. So not a pretty picture there as well. So I thought I'd take a look at some of the technicals and some of the price action that we saw on some of the major currency pairs, and give you an idea into going into the new trading day what levels we're going to be paying attention to. So let's start off with the euro versus US dollar. And if we look at this chart here, we saw the price action move sharply to the downside here off of the Fed decision. The new low going back to 2002 comes in at 0.98118. But then we did see a rotation back to the upside here. As I mentioned, the dollar started to get weaker. We saw the stock market start to improve during the presser, and we saw the price extend up toward the 38.2 of this move to the downside. This is the week's trading range, and we found sellers around that 38.2% retracement, and also near the swing area. Swing low, swing low, swing low, break below here, and then reestablish support and move higher. Swing high, swing high. Some choppiness above and below the level again here, and again in trading here today. This move to the downside, recall here, was off of the Russian news about Putin increasing their reserves and for deployment into Ukraine as he continues his fight with no desire to back down, and he's not bluffing on it as well. So that sent the dollar to the upside through here, and the euro lower. But as you saw, the rebound to the upside stayed below the 51 level in trading here today, so that keeps the bears in charge. So what now that we're down here near 96.43? Well, we're below the old previous low here. We're below these lows through here. Swing low, swing low, swing low through here. We would have to get back above this level, these levels right here, this level right here, and then work our way back toward the 0.9951 level. That's even before we get to the parity level. So all those levels need to be retaken to the top side if the buyers are going to take more control. If they're not, we go lower. Okay, that's just the way we're going. I mean, we don't really have a lot of levels to on the downside to grab hold of, because you have to go all the way back to 2002. But we do know is that as long as the price can remain below 63, the 0.9863 here, this old low right here, we're not going higher. Okay, the sellers are in control. So that's how you play the euro versus US dollars from the short side. The buyers had their shot. They couldn't get above these levels, and they started to break it down again. So we'll see what the new day brings, but the bears remain in control in that currency pair. Let's take a look at the dollar versus yen, and I'll take a look at the hourly chart, because this area right here is where the price has been trading since the we first reached the 145 level, and then the Bank of Japan came in here, asked for rates, and the market moved higher right against the old high. In trading here today, we saw the dollar move up close to that level, those levels. The high price today reached 144.69. Let's call it 70. So within about 28 or 29 pips of the old highs, right below the 145 level. But then we started to see the rotation to the downside off of the stocks moving higher, interest rates coming off their peaks as well, the more dovish kind of comments in the press conference, and we moved. But where do we hold support? We held support against this trend line right here, and also the 100-hour moving average. Buyers came in against that level and pushed the price back to the upside. I'm not saying that the dollar yen is like the euro. The euros are trading at lowest level since 2001. Dollar yen didn't even get back to the 145 level. It has that fear of the intervention at the high, so there is some sort of upside ceiling that the pair is leaning against, but it doesn't mean that we can't move that way anyway. Holding the 100-hour moving average not once but twice here today was key. And as long as the price can remain above the 100-hour moving average and the 200-hour moving average here, the buyers remain in control. So that's what I see in the dollar versus yen. Sterling versus US dollar, some key levels here in play. The market moved lower. This is the lowest level since 1985. We took out the lows from last Friday, last Monday, last Tuesday in trading in the off the Russian news, and we stay below that level through the FOMC decision, where the price again moved lower. Then we saw the snapback rally, and the rally took the price all the way back up to this low, this low, this low, and we found sellers right here in between this little yellow area between 1.1350 and 1.13568. 7 pip trading range right there. Sellers lean. The price started to move back to the downside. We're currently trading at 1.12742. Using the same logic that I did in the the euro and the dollar versus yen, as long as the price remains below this 113.50 level now, sellers are more in control, right? Then we have the downward sloping trend line here, which is going to dissect that old level as well. So that's going to become in play, and we're going to see the 100-hour moving average start to follow up behind it as well. So I'm not saying that we can't go higher. What I'm saying is that if we have this top side resistance that has to be broken. And until it's broken, the sellers still remain in control, and we have to respect that bias in the sterling versus US dollar. So bears are in charge there for that currency pair. The dollar versus Swiss, like over here, we were able to get above the 100-day moving average, but we stalled within this fairly wide swing area between 0.9686 and 0.9707. 14 plus 7, 20. 21 pips or so wide. We swing high, swing high, swing high, swing high, swing high, swing high, swing low here, and then break below it, and then swing high, and we go back into that level, and we start to see the price rotate to the downside. Dollar versus Swiss is still that currency pair that sort of sits in between levels. It's not near the highs. It's not near the recent lows. In fact, the low price here stalled against the 200-day moving average. The high price here is stalling near the 100-day moving average. And in between sits the 100 and 200-hour moving averages. And trading here yesterday and today, the market found support ahead of the 200-hour moving average, which is starting to move to the upside, giving a little bit more of a bullish bias. But watch the 100 and 200-hour moving averages on the downside as long as the price remains above it. We could see the price move above the 100-day moving average, and so on and so forth. If we get above this 97.07 level, I'll be more bullish. Get above the 61.8% at 97.199. That's more bullish as well. The Swiss National Bank is meeting tomorrow, and so that's going to be in play. By the way, the sterling versus the Bank of England is also in play in the new trading day as well. Let me move this over here. in play in the new trading day as well. They're expected to raise rates by 50 basis points. Swiss National Bank could do 75 or 100 basis points. So that's going to be that's going to help determine bullish or bearish here for that currency pair. Be aware, be prepared to understand the levels in play. The dollar versus Canada. What we saw in trading today was a movement further away from the 50% retracement. I'm going to go to the weekly chart, take a look at the high price here and the low price here. The 50% midpoint comes in at 1.33364. As you can see, the price is moving away from that 50% in toward the upper end of the range. We also moved above the September high through here at 134.194. That's going to be some close support in this swing area between 133.27 and 133.83. 83, and the 50% at 133.36. All those levels come in play as long as the price can remain above. The buyers remain in control for the dollar versus Canada. This is what it looks like on the hourly chart. The price low after reaching the new high here came back down toward the 38.2% retracement and also grazed these lows for the day through here. Swing low, swing low, swing low, swing low, swing low, all those levels right there. Buyers came in against the level and started to push the price back up, and as you can see, we're making new highs as we head into the new trading day, into the close. So dollar versus Canada, buyers remain in firm control. Here's the 133.36 level. That's the 50% retracement level. Stayed above that after breaking above it during yesterday's trade, and stayed above it all day here today. So the buyers are firmly in control in that currency pair. The Aussie versus US dollar, like the euro and the pound sterling, reached new lows. These lows go back to 2020. The pandemic sell-off through here. What is significant here on the weekly chart is see all these lows right here, this yellow area right here. We have swing low, swing low, swing low, swing low, break below it, then use it as resistance right here, use it as resistance here, and then break above it. That was the last time we traded this area here. It was way back here in May of 2020 until we came back down to it here in the month of July, and then retested it here last week, and then fell below the level this week in trading. So this area between 0.66, I think it's 565 and 0.66809 is going to be resistance on the Aussie versus US dollar. Go to the hourly chart, and the high price that we did see correct to the upside here did get above the old 880 level. That's this level 66809. We did move above that level in the trading here today, and we also moved briefly above the 100-hour moving average, but we found sellers against that level and pushed to the downside. I guess if I take a relook at the I didn't realize I was off the page here on the weekly chart, but this is what it looks like on the weekly chart. Here's that yellow area, and we moved, we're staying below that level between 0.6656 and 0.66809. Finally, the last currency pair against the US dollar is the New Zealand versus US dollar, and this currency pair also fell sharply off the data and moved back up to this resistance area between 0.5909 and 0.5926. That level corresponds with this area here off of the weekly chart. Swing low, swing low, swing low, swing low. The price moved below that level and then came back up to it, and that's where we found sellers right at that key area right here. It broke below the trend line in that swing area. Bring it up again. Here is that level right here, so staying below that level is more bearish, and we are also looking to retest and get below this lower trend line, so the bears remain in control for the New Zealand versus US dollar. Thank you for my patience. It's a little long video, but I want to go through all the major currency pairs like a weekend report, because the world sort of changed with the new Fed policy and the new Fed outlook. So I hope this helped and allows you to set your levels, understand the risk defining levels, and have more good fortune in your trading. So my name is Greg Michalowski. Bye bye.